Please help me welcome Katie Maxson-Landis of, did I get that right? Yes, Katie Maxson-Landis of Moxy Accounting and Moxy Education. I'm a little off my game today, Katie, so just bear with me. Looking forward to having this conversation with you. This is the first year that California is actually a rec legal state. So I'm sure we're gonna have some interesting things to cover there. And also some interesting things happening between Oregon and California. So we've got a lot to cover today, ladies. If you have questions, please put them in the comments for Katie, and we'll be checking in at 1:30 to get any of those questions you have answered. It's tax time, and if you don't have questions, you're not doing it right. So please take advantage of having Katie here today and ask her those questions you need to make sure you get your taxes done on time and the right way. So Katie, welcome. Thank you for joining us today.
You're welcome.
So first thing I want to talk about is I'm really interested in hearing what is going on in Oregon in your cannabis industry today as it relates to taxes and things you're seeing that you want other women to know so that they can be prepared over the next year.
So the big thing that I am seeing is that my fast growth companies, for the most part, about 8 out of 10 of them are gone. They were either in an accounts receivable position where they didn't have cash flow, or they were in a consignment position if they're farms, and or a wholesale position, and they didn't get paid. The price plummeted again, Croptober, end of November, end of December in Oregon. Again, the price per pound was $700. Now, bear in mind, the price per pound in 2015 was $3,800. So at the start of rec, which is where you are, this was still a luxury good and not a commodity. And so the clients that I have right now that are succeeding have had a slow growth strategy. They've had a tax group that's worked with them. They're attorneys and CPAs, and they have all learned how to do taxes for their industry. They've learned how to do bookkeeping. They've learned how to do cost controlling. Dispensaries are still receiving the largest hit of that proportionally of that tax because they have the most non-deductible expense. And so getting a big handle on that is going to keep your cash flow in line. It's going to keep your investors, if you have any, in line. And it's going to keep you from losing your shorts in the 36 months that we are advanced on you in a lot of different ways. Many of the people are then turning to hemp. Hemp is not just the next gold green wave. It too has its issues and problems and considerations. And just because it's not federally illegal, well, then you just get to go into an environment where you're living in a pseudo recreational, pseudo taboo world with CBD, and yet you're competing in the marketplace with anybody else who wants to get into it because it's no longer in a prohibitive sort of environment. So the prohibition of cannabis really has created an interesting kind of vacuum from a tax standpoint. And I think people need to be looking now in California, because people in Oregon are now looking forward to when it does come off the table. 280E isn't a consideration. And every Tom, Dick, and Harry that thinks that they can grow weed is now in this game. So, and how you build a strategy and how you control funds and where you get investors and how you bring that entire team together, especially ladies. We've got the team building capacity that the boys don't. So we need to be able to try to figure out how to stay alive and engage each other and pay for each other's services and use that sort of networking capacity to be able to get it over the hump, because Oregon has got 3 years ahead of you from a tax standpoint. So we have a 3-year different tax situation, but you guys could come out of prohibition very quickly into the idea that cannabis makes money. And then you're going to have weirder and more difficult barriers to entry when landlords can jack rents up, when people can, in fact, that this thing is just going to throw money off all day long. And most importantly, when taxing authorities decide, oh, it shouldn't be a 17% sin tax, it should be a 28% sin tax. And all of a sudden, you're in this cash flow problem with dotting I's and crossing T's. So. Wow.
Little did we realize the tax nightmare as business owners we were taking on by deciding to go into a cannabis business.
Yeah, the prohibition is both a negative and yet it also is a positive in that it keeps a lot of very risk adverse people at bay. And that's a benefit to you because our group of people is not, it's not that we're risk seeking, but we're visionary and we're benchmark leaders and we're people that you want to trailblaze. But when that is opened and inviting to, again, anybody that doesn't have that risk aversion or that barrier to entry, all of a sudden there's going to be a very different kind of market to have to compete in, which means people like you with getting a solid brand, name, recognition, being able, me educating, trying to get people out there to think about things from an alternatively different standpoint, and then a lot of internal bookkeeping, projections that are real, projections that don't hope, projections that show bad scenarios some days and good scenarios in long terms. And then you get that team of people that really cares. And you've got tax wrapped in, because again, people aren't thinking, oh, I've got to get my taxes in order. They only think about that once a year. You have to think about that every week in cannabis. Every week.
That is for sure, because it can very easily get away from you.
Oh,
if you're not on top of it every week.
Immediately. Yep.
So, okay, so it's tax time. What do we need to know as a legal state versus a medical only state going into tax time? Is there any consideration of difference between the two? Or is it basically all fall under the blanket of 280E and we need to just focus on that?
Right. So that's a great question because people are no longer including medical in the conversations, and yet the majority of the country is in that specific situation. So, there are only 10 direct legal states. 33, 34 states are medical. So you are, as someone who's purveying in that state from a medical standpoint, the number one thing to realize and remember is you need to file a federal tax return.
Okay, noted.
Medical has no dispensation at either the state or the federal level to not pay taxes. It doesn't matter if it's a perfect reimbursement scheme. It doesn't matter if it's some sort of other legislative kind of scenario in which you are trying to be a philanthropic person. You're not a 501c3. An individual can't be. And you need to file a tax return. Everyone. Even 0 is the wrong answer in medical. Period. 0 is the wrong answer. So I think
I'm taking it you've seen people do that before.
Oh, yes. Yeah. And, I've seen the people that have the Schedule C added onto their individual tax return for skydiving or for photography and then they put some amount of the cannabis income on there and then they take it all the net income and they don't disclose to their CPAs or they're putting it. It's time to start talking in your state from a medical standpoint to people and see if CPAs are willing to help. I can educate them, but we need the industry to ask. We need the industry to be willing to come out of the woodwork. And it's safer when you file a medical tax return. It's safer. It doesn't feel good. These people, the problem is that this industry has to put the long pants on and realize that it has a tax burden. And it has survived for 50, 80, however many prohibitive years as this gray market or black market. And it's had the benefit of not paying taxes. Everybody would want to be an accountant if my industry was the only one in the United States that didn't pay taxes. Not because accounting's fun, hey, but because I would have a $50,000 on the bottom line more than you always. So, just from that break. So being able to have a tax team, be able to have a CPA that's going to help you move from the Schedule C, the just little person you are, to maybe recognizing that there's a couple of you guys in there, we know there are, recognizing when it's time to move to being a corporation and take advantage of, tax rules, which are clearly preferential in this country, especially this year, to being a corporation, not an individual. But,
okay, so let's have that conversation then, because I think that there are a lot of women who are very unaware of what their corporate structure should be. And, I've had this conversation with educated women in finance as well.
Yeah.
So our options are sole proprietor,
Yes.
partnership,
Yes.
LLC,
Nope.
S Corp, and C Corp. Okay.
No LLC. So
Okay.
an LLC is not recognized by the IRS. An LLC is a state thing only. So there are 4 flavors of tax returns. There are the Schedule C, sole proprietors, 1 dudette. There is a 1065 partnership tax return, 2 or more. There is a C corporation, which is the default corporation. And then there's a S corporation, which is the corporation that you elect. It sits between a partnership and a regular corporation, has a lot of fluidity into it. So an LLC can be any of the sole proprietor, partnership, or S corporation. You can have an LLC that does all that. You can have an LLC that's a C corporation. The LLC means that it's in your state, recognized. The federal government says these are the numbers on the tax return you file. So they never made a designation for LLC, which has been a gigantic pain in the ass, let me tell you. But yeah, so knowing when to move from one structure to the next structure is a combination of things. You cannot just engage an attorney that says every cannabis business must be a C corporation. Let me tell you, the accounting answer to everything is it depends. That is a deep and nuanced conversation that relates to a lot of intimate things. So you want to actually have a conversation with someone that is going to have your best interest at the bottom line. So when you make decisions based on, you can't make a decision about what kind of structure you have based only on tax, and you can't do it based only on liability, which is what attorneys are looking at. So, you know, there is a nuance of those things that's really important to be able to be educated about.
Okay, so let's take a company in California, product maker. I make salves and lotions.
Okay.
How do I evaluate whether I should be sole proprietor, partnership, S corporation, or C corporation?
Well, so the first question would be, are there more than one of you? Because if there's 2 of you, you have all those options on the table. If there's only 1 person, you don't have a partnership available, clearly. But the first question I would say is, okay, where have you come from? Black market, no market, multi-level marketing, and I used to do something else, and I'm starting to include a CBD line in my product line. 20 years experience in something else and decided I'd get into this, i.e. don't know anything. You know, been helping medical cancer patients for 20 years, i.e. know a lot, but have been a drug dealer. You know, so where did you come from? Because that's going to give me sort of the ability to start asking questions about your fiscal literacy. And so if you are somebody who's never ever paid taxes, I have a different conversation to have with you than if you're somebody who's had a corporation before and kind of understands the structure.
So when you say pay taxes, I just want to clarify that what you mean is not that you haven't paid your taxes, but that as a business owner, you may not have as a business paid tax.
Filed a tax return that has a business structure that has a business structure behind it, me being the engine of it, not a W-2 or not just a 1099 or not like you're actually thinking to yourself, oh gosh, I got a name and a space and a rent and I'm trying to manage cash flow and do all those sorts of things as a business. So
do you find, let me ask you really quick, do you find there are a large number of women in this space who are first-time business owners?
Yes, I do. So the single biggest problem I find with first-time business owners is the transition from having a JOB where you get your money and it's taxed to having a gig, having your side gig, or having the new gig that you're doing because you got rid of your JOB and not realizing that that money is untaxed. So we are programmed to think, oh, the money that shows up in my bank account has already had its tax taken out of it because it was a paycheck. So the $1,000 from your paycheck is actually $1,200, and the $1,000 from your gig is actually $750 because one of the benefits of being an employer is they pay part of your taxes. and they withhold it for you, and they take a little bit out, a little tiny bite every single time. And so at the end of the year, you're like, oh, I only owe a little bit. So, you know, one of the educational products I'm really working towards is getting people just the little basics of this sort of stuff and a spreadsheet, so that every month or week or whatever, you could go, oh, I owe Social Security and Medicare. The number one problem with all little Schedule Cs is people forgetting that they have to pay their Social Security and Medicare taxes. And that's really the payroll taxes. And so that's the thing that bites them on the butt, is that 15%, whatever the amount is that you made in a year, multiply it by 15% on the bottom line, if you can go there. And that's what you pay in self-employment. That is the real dollars you have to send in a check. There's no adjustment. You got to send it. So it's better to pay it every month. It's better to pay it every quarter and have some sort of methodology to be able to give yourself a down and dirty back of the napkin. Ooh, on the bottom line is $10,000. Well, I better get $1,500 into the government.
And that is the downfall of actually having a sole proprietorship, is that you get nailed with self-employment tax, which is just this 15% tax on top of everything that you do. Because, you know, in America, we want to support small business, so we nail them with that.
Well, what it's saying is, what it's saying to the sole proprietor, the government is saying to the sole proprietor is, we see you making money. We see you making money and not being an employee of somebody else. So you need to still pay into Social Security and Medicare. But you do it once a year or quarterly. But we see you. If you weren't working for yourself, you'd be working with somebody else. So those are equal wages, equal. Anything you earn really would have been a wage, which is not true, which is why as corporate structures get more complex, there's more nuance between and division between the owner and the business. So on the other, so as a C corp or as an S corp or as an independent contractor or a Schedule C, you are your business. When I'm a C corporation, I'm the employee of my business, and my business also exists. So it pays taxes in a different way because it's accounting for you, not as an owner, but as an employee. And employees are deductible. Owners are not always deductible to businesses. So, you know, the thing I would say for the most part is, if you're in your first year as a topicals person and you are using hemp-derived CBD only, I think you have some time to be able to have a conversation and when you as to whether or not you should advance into being a corporation. Because as long as you manage the bottom line and your cash flow every quarter and send some money in for the self-employment tax, you've got the privilege of going to net income. So you're going to be building the same tax problem that a normal person would, and you'd be building it incrementally, because your first year might not be that great, and your second year might be only a little bit good, and then your third year might be crazy, and then and then by that point you figured a few things out. But if you are in cannabis, you need to talk to somebody right now, because when you don't have the opportunity to go to net income, when you get taxed at gross profit, which means you get taxed not with any of the expense of your regular business, you only get to expense the cost related to creating inventory, creating, controlling, securing, packaging, testing, so not delivering, not supplying. When you get taxed at that number, the self-employment is the first thing that is going to bring the IRS to your doorstep, in my opinion. So when you can't pay your self-employment taxes, you've created two problems. One, you have a tax problem. Two, you're now on the IRS radar as being a weed business that ain't pays taxes, you know? So it's like, wow.
So you mentioned hemp, you mentioned CBD. Now, 280 does not apply to hemp businesses, correct?
For tax year 2018, it does. For businesses that started in 2019 or are doing sales of an existing business in 2019 related to hemp-derived CBD, you get to go to net income. Now, with that said, one of the other major things that now the gold rush up here is all hemp. Hemp's going to be the thing that saves it. And did you know that hemp cures everything? Everything. Hemp is the new snake oil. It's everything. Sorry, I've had some snarky people come in this door and tell me, dress me down on some stuff. I'm like, so the problem with hemp is that in 2018, you are still a federally illegal product. And you are under the auspices of, you know, the Controlled Substances Act and the DEA and all that. Now in 2019, you're still under control of of a government agency. It just happens to be the FDA. And the FDA are kind of worse in a lot of ways because they're going to go trolling your website looking for you making medical claims. They're going to go and look at the advertising and the regimen that you're involved with from a packaging standpoint and a disclosure standpoint. They are uninterested in you moving across state lines with this product still.
Really?
The Food and Drug Administration on December 20th put out their response to the 2018 Farm Bill passing, and the Food and Drug Administration's expectation of all hemp businesses that deal with CBD, all was that they are not being put into food-grade products. Goodness.
Sorry about that.
Fine. They're not being put into food-grade products. You are not giving them to anybody for human consumption because it's not been tested by the Food and Drug Administration. And you are not moving it across state lines. So you are not internet sales. You are not shipping. You are not like, you are, if let's be very clear, the 2018 Farm Bill was not designed to help the CBD industry. It was not the 2018 CBD industry bill. It was the Farm Bill. They want you moving biomass for rope and milk and seeds to eat and protein and stuff to feed your cows. They didn't give it to you for CBD. So CBD is still in a little bit of a wild man's land. It's concerning to me there's so much multi-level marketing that's jumping around in CBD all of a sudden. Oregon doesn't really have much of that. And that's a distinction in California, and it will be interesting to see how that plays out. But for 2018, you are a federally illegal business if you're running CBD. In 2019, I think you need a nuanced person that has the ability to be able to make sure your costs are still pretty damn, I'm still doing the bookkeeping so that those things look exactly the same. I'm still doing the work of making sure cost of goods sold is controlled. And then if you know, and I'm just taking the tax return to a net income position.
Okay, this has just gotten like so confusing.
I'm so sorry. Let's try
to
work it out.
We need this conversation because this is where so many of us are going to get screwed.
Yeah.
So if I have a hemp business and I'm focused on biomass, I don't really need to worry. I can ship it across state lines. I don't have to worry about 280E. I just have to worry about local permitting, done and done.
Yeah. Starting
2019 forward. 2018, 280E still applies. It was pre-Farm Bill.
Yes. I mean, I think if you're talking specifically about a biomass situation, you're probably safer. You're still safer in 18. I think that you can, it is CBD that is the problem. It is the extract problem in 2018 for hemp. If you are a biomass, if you produce 32,000 acres of hemp and shipped it all over the country to do whatever, and you never made it into CBD, I would take that tax return to net income because you farmed. Now, if you bought 32,000 acres worth of hemp and you extracted it into a CBD, extract or isolate or distillate or what have you, you've still trafficked because the DEA has had CBD, still has actually, CBD as a separate and distinct drug on their list in the Controlled Substances Act. So there's still some risk. That's why full spectrum cannabis CBD is still illegal and hemp CBD isn't. We know it's the same plant, right? I mean, technically, is it the same plant? Is it not? It's coming from the same genus. So that's what they're looking at. So, if it's got THC in it, you got a problem.
Okay, so if I am an extractor, we have a lot of extractors in the group. If I'm just extracting it into an oil and I'm selling the oil, there's a difference between hemp oil and CBD oil. If I'm specific CBD oil that I'm then going to turn around and sell to people who are going to turn it into something else, I'm still illegal.
Almost. So hemp, the primary terpene that the hemp plant is asked to produce is CBD. But if you have a recreational marijuana plant that is a high CBD plant, it might not be below the 0.03 necessary to be considered a hemp plant. So if you have, a Charlotte's Web that isn't coming from a state certified hemp source, a Department of Agriculturally blessed hemp seed, you may have an issue. With that said, this is the vast unknown. This is the Wild West. Welcome to the new Wild West. So I'm reticent to give. What I would say is that if you deal with, for me, from a tax standpoint, the line is very clear. And you need to get good legal advice from somebody who feels like they know the industry and has a legal position that they feel like they could defend in court. More likely than not is my standard. Am I more likely than not to prevail in this line item or this tax deduction or this conceptual idea? If I'm not 51% certain I'm going to win, I don't always do it. You need a lawyer that's kind of like that too. None of these guys are like, well, we don't know, we'll find out later. No, don't make a shitty position and then defend it. Make a good position and feel like you can. So for CBD 2018, it's illegal. It doesn't matter what source it's coming from. Hemp-derived CBD is also illegal. In 2019, the 2018 Farm Bill took the extracts derived from hemp off of the Controlled Substances Act, basically, because they derived from hemp, and put them into the Farm Bill. There's a line to walk, though. If you've got a warehouse full of Charlotte's Web clones, you might not be in hemp.
Wow. Okay. So we're at the 12:30 mark, and so far, Kyra, I'm sorry, I hope I'm pronouncing that correctly. She says, interesting, I'm on the hemp side, and I was told by multiple CPAs that are in the space that I was not 280E in previous years.
They're wrong, in my opinion. Because tax law is not retrogressive. A tax law that's enacted in a tax year stays in that tax year forever and ever and ever and ever. And it may be that it's the difference between what those CPAs are viewing as hemp and what they aren't. My tax position is pretty clear that the DEA, who is in contempt of court in the Ninth Circuit for blowing off the Ninth Circuit, is still prosecuting people for, or feels very comfortable prosecuting people for CBD derived extract sales or operations in 2018. So what that says to me is if I file a tax return for you that the DEA would feel comfortable coming after you at, the easiest way to do it is just skip the DEA problem and go straight to the tax return and say, did this stuff come from hemp? So in 2018, I have a client that is a absolutely legal hemp grower. She's in Montana. Her name's Kim Phillips. She's fantastic. She's a trailblazer. She won a court case against the Montana Bureau of Reclamations for her water rights, federal water rights. And she sources her seed from the European Hemp Seed Bank under Department of Ag rules. She has also gotten a DEA license to be able to grow and extract CBD in Montana, a state that allows hemp to be completely legal before it was even legal on the federal side. And because she gets her seed from a federal government blessed source, is legal CBD in 2018. If you did not buy your hemp seeds from a Department of Ag blessed source, I think you have an issue. I'm very conservative though. I am very conservative because I see farmers not wanting to lose the farm on tax. And I feel like when farmers come to me and say, okay, is this legal? I got to be real clear about what legal looks like so that they can go back and say, did you get your hemp seed from all that Charlotte's Web you've been growing in rec and you threw it on the ground? Or did you actually go to a Department of Ag source and have a number related to that lot? I mean, these are seeds that are $2 a seed, or between 57 cents and $2 a seed. And you just bought 600 acres for it? It's like a $1 million investment. It's crazy.
My husband told me that, you know, because he's in agriculture, so we had a conversation about seed price. And he told me that what came to mind for him was there's a seedless watermelon that in the industry is like 25 cents a seed, and it is top of the market as far as price. And he's looking at hemp seeds now that are $1.50, $2 a piece. It's just,
it'll drop, and that's the thing. It'll drop 3 years from now. You'll be able to buy seeds for whatever. But so the 2018 is it's a step over year. But to be clear, and so it may be that her CPAs or those CPAs are just taking a different tax position than I am, because we all can take a different tax position. I take a real conservative position because this has a relationship to marijuana, and my clients want to be conservative. But you know, it is absolutely not true that the 2018 Farm Bill, which was signed on the 12th of December, is retroactive. I found nothing that said it is retroactive back to January 1 of 2018. It's prospective. It basically, at the best, I think you could make a winning, more likely than not, tax argument that as of December 13th, you went to net income. But that's the last 2 weeks of the year. Now, if you sold $1 million worth of shit in the last 2 weeks of the year, I would take the position. But that's not normally what really happens. So people sold over the course of a whole year. And I get into fistfights all the time with when is something legal and when is something illegal. And basically my position often is, until the government tells me, hey, it's illegal, or it's legal, it's illegal. That's the conservative stance I take. And then if we start most conservative, we can move off of it if we agree on things.
okay, so let's address this quickly. You say conservative.
Yep.
And I want to know, what is the downfall of being conservative? You have to pay more taxes. What is the benefit? So when we're trying to kind of weigh out risk, if I'm looking at, okay, my accountant says much more conservative, we have to apply 280E in 2018. What is the aside from having to pay the money, what is the danger to me in doing so versus the danger in me saying I'm going to disregard 280E and listen to this other accountant who says I can apply it for all throughout 2018. So I guess what I'm getting at is the risk of being conservative is it costs you a little money, but the risk at being not conservative is it costs you your entire business.
It can. I mean, again, I think that if you're going to take a very conservative or very aggressive tax position, you need to know that there's an attorney or a CPA that's willing to stand by that position, that they're not just doing it to try to get your bottom line down enough to satisfy the client, because that's not a CPA that's willing to have difficult decisions with you or think prospectively or proactively about keeping you within the bounds of tax law and being successful. I think that's a lazy CPA, frankly. Because I think that's the job of a CPA with cannabis, is to keep you inside of the bounds of the law to the best of the ability and file the proper tax return. When you don't file a proper tax return in tax court, you're just immediately considered wrong. You're wrong until proven right in tax court. So if the IRS can walk in and easily slam dunk you, yeah, it might not be the end of the world. I mean, you have to decide if you're going to weigh, oh, the $100,000 that I should have paid in 2018, I'm going to have to turn around and pay in 2020, but you're going to pay taxes, penalties, interest, lawyer's fees, accountant fees. Is that really? I mean, maybe you've offset that yourself. You've also had to go to tax court, or you are now maybe you've just pulled an audit for the next 5 straight years from your business because they can prospect. They can say, oh, well, we see that you did 18 wrong. So we're going to just audit 19, 20, 21, 22, 23. Oh, in the next 2 years after that. So, I mean, I like to just take a tax position and feel like it's simple. I can, defend it. I know where the breadcrumbs lie. And if I have a revenue officer in the office, I can say, this isn't scary or hard. I've done all the accounting work to show you how it was this way in 18 and we changed it in 19, because what I want is 19 to be what they are going to agree on, not 18. Because 19 gets to go into 20 and then 20 gets to go into 21. And if they agree and 2023, 19 drops off, 20 drops off. So then, they can't open it under audit again. But they can open 18 under audit or 19 under audit because you filed it fraudulently. All those returns then get to be suspect as well. So, I mean, we have a tax code that asks you to be compliant based on your own feelings about things, which is why it's such a gray area. But I really encourage people in cannabis to find non-shady CPAs, find just traditional CPAs that are willing to look at something from the standpoint of saying, gosh, this is a problem that my big brain needs to try to help you fix. And it's not by being tax evasive, it's being tax assertive or aggressive or cash flow, conservative, finding the ways to think around your behavior changing, because the tax code isn't going to change for you. The 18 code is the 18 code.
So that it reminds me of something I've been hearing quite a lot, which is a lot of the companies here in California who are doing well just start doing this with their money. Buying planes and paying people $1 million a year salary and kind of spending money like it's liquid gold, like they just have an unlimited supply of it.
Yeah, and as a person who's 3 years ahead of you, those businesses are gone in Oregon. Those businesses have been bought by Canada. Those businesses have consolidated into other businesses. People are waltzing in here and buying farms and dispensaries and licenses for pennies on the dollar. I negotiated a conversation between somebody who's selling 2 dispensary licenses, a building, a wholesale license, and his entire sale inventory for $348,000. Now it's in the Medford, Oregon area, but those licenses alone were $10,000 last year to get. So, in a wholesale license, another 5. So,
Okay, so why are
the Maseratis in the shareholder distribution line? I'll tell you.
So why are those companies going under? Do you find that a lot of it is tax related? It's all taxes.
It's not all taxes. It is fiscally illiterate owners. It's weed dude bros that just thought, we're going to grow weed and sell weed now. That did not pay attention. It's over for dispensaries. It is overbuilding the structure and hiring all your friends to sell weed or be managers or eat out or bring all the honeys to the Canna Cup or to go to Las Vegas for MJ BizCon with 17 people. It is $120,000 in advertising to compete in a market that's incredibly competitive now. It is huge rents that all the landlords thought, I'm going to be able to get $10,000 a month from these guys. At a farm level, that might be one thing when there's some deductibility. At a dispensary level, that's a terrible idea. And it's literally people just, thinking that it's a gold rush and having lived their past lives never paying tax and never really paying attention to tax. Taxes are the number 1 expense to a business. Local, payroll, business, income. Number 1, the number 1 thing you pay for is taxes. And when cannabis people don't factor that in, it multiplies quickly. And then you get 3 years of not paying taxes, and then you get interest, and then you get penalties, and then you get, oh God, so a lot of people grew really fast. My top 5 clients have all grown very slowly. None of them are missing market share. None of them are, all of them have won awards, best of in the Portland area, or, you know, the regenerative cannabis groups, or any of that sort of stuff. They've decided to try to stay DIY and let the big guys duke it out to figure out the race to the bottom. The McDonald's of pot is still been unfound, you know. I wouldn't say that it's MedMen in California just because they're the biggest. I wouldn't say they're the best, and I wouldn't say they're the worst. You have an entirely unknown landscape coming towards you, and one of the biggest predators in that landscape is taxes. It will take all the little people who don't pay attention to it out of the game. So if you think that you're growing, you know, if you're claiming to your investors or shareholders that you've got some sort of 20% return on whatever, you have a negative 8 or 10% return because you haven't factored in taxes, in my mind. I had an investor the other day said, cannabis is a sure thing. I can get a 12% return investment all day long. And I said, what? And he showed me his numbers. Nothing related.
Wow.
Yeah. So, you know, it's just not the thing that these guys, you know, historically have been doing. I see women being far more nuanced and thoughtful about the tax situation. I think we forecast one step further down the road. But, you know, with that said, to answer your question, a topicals manufacturer, an extractor that's dealing with CBD only in 2019 has a lot more comfort and assurance than an 18 position. And yet I would still do the bookkeeping to be very clear about what the costs of the goods that you sold are, because now you really need to compete in a market that might be able to get its olive oil for $4 a gallon less, and it has a competitive advantage over you. So, you know, it's not just about the weed anymore. That used to be the controlling thing. Now it's really about doing business, doing good business, doing business the way that that needs to be done, creating those networks, having good brand, having a team, doing that work, you know, because if you don't have prohibition keeping every Tom, Dick, and Harry out of your MLM for CBD products, you're competing against another 1,000 of them.
Hi, that's so true. Okay, so we are in about 15 minutes left. I want to make sure that we touch on tax teams.
Yeah.
So this is something that I have learned is so valuable, to have a CPA and attorney and bookkeeper and financial advisor who all talk to each other.
Yeah.
Because every one of them has a different perspective on the legalities and the obligation of the business. And in most industries, unless they're all in-house, they don't act as a team.
True.
So it is really, really critical to choose individuals who have a relationship to each other, or are willing to have a relationship with each other, to discuss the client's best strategy. So tell me a little bit about your approach to being a part of a tax team, and who you see is really critical to make sure you have on that team.
Yeah, I definitely agree with that entire sentiment. So whenever I bring on a client, one of the first things I ask is, who's your tax team? Who's your attorney? 9 out of 10 times that's a criminal defense attorney, and the majority of the time, I get the majority of my referrals from attorneys. So I know a lot of criminal defense attorneys. They are the first trusted advisor, but they're not the last trusted advisor. So what I often suggest is that they go back to that criminal defense attorney and work with a business attorney that guy likes, that guy or gal likes. And if they don't have a business attorney that they use, I have a pocket full of business attorneys that I've had conversations with. There are a lot of attorneys now specializing in cannabis. And I think that the attorneys that actually are specializing in cannabis already have a relationship with a CPA, because the number one thing that attorneys don't know how to deal with is tax in this arena. Because they might understand some about taxation of cannabis, but my tax return is mine. When I sign a tax return, it's my license on the line. And so you have to have a relationship with that CPA, because there are things I will not do. I don't care how much money you give me, and I don't care what your position is. I'm not doing them because it's my license on the line. And I think that every professional needs to be able to have the opportunity and it has the obligation to say that to you. So I would say when you're picking a tax team, you're picking somebody that can say no to you. You're also picking, because they have your best interest at heart when they say no to you. You inadvertently strayed the line. You're not trying to tax evade. You don't want a CPA that's like, oh, the very first time you tell me that we have to do this at net income, you're trying to get around taxes. That's not true. What that means is you just don't understand where my tax line is. So you need an attorney that's willing to listen to it. Many attorneys' eyes glaze over and they go, oh, that's the CPA. I can't do that. You get somebody who's engaged, because that guy can't build a business strategy and a business structure for you if he doesn't understand that you can't put $100,000 into marketing because it's not deductible. Or negotiating a real estate lease can't be at 30% more than the normal going rates with a triple net because it's not deductible. He has to be able to be the person, one of the people in your world that can tell an equally unknowledgeable landlord or building inspector or cop, hey, this isn't illegal and here's why. So they need to know that, and they need to understand the landscape of what's happening. Prices shot up here in rents and drove everybody out. All of a sudden, for edible topicals, you had to have a commercial kitchen. So commercial kitchen space became a premium and went crazy. And so all of a sudden, you know, there's no way to be able to meet that cash flow demand. So you need a tax team of people that's gonna be able to see the nuance, see where you've come from and what's on the event horizon. And a very good business attorney, it should be somebody who's going to conferences, reading things. Tax attorneys should be reading tax law. Just go to a CPA and ask them if they just read the Harborside ruling. Because if they haven't read the Harborside ruling, which is the out of the Fourth Circuit Court of Appeals, the newest piece of cannabis tax law that fucks everyone, please find a new CPA. Or please investigate a way to be able to just know you need to do a lot more tax education for yourself than you might have expected.
Okay, so you just dropped a bomb and walked away from it. How does that ruling?
The Harborside ruling is a complex conversation, but in a nutshell, in my opinion, Harborside argued the wrong issue under the wrong legal precedent, and it just ended up reinforcing for dispensaries that the court will not intervene against the IRS's position that says the only tax deduction for a dispensary is the purchase of cannabis. I am a lot more nuanced in my tax position than that. And yet it's a problem when a tax court case comes down, or it's not actually a tax court case, it's a Fourth Circuit case, but when a court case comes down that creates precedent against you, it's just another rock in your shoe. And because Harborside is the biggest dispensary, it's the most influential and powerful. It has a lot of political whim and sway. And it just got busted back into a position with like $125 million worth of sales being taxed differently. They now have to keep fighting because they can't pay that tax bill. That tax bill will take them down. They're fighting a tax court case between 2008 and 2012. They're not even to 19 yet. I mean, that's a great example of when you file a tax return that is super aggressive or isn't following the tax laws, and you take a tax position that doesn't have a good, strong defense behind it. You might still be arguing 2008 through 12, but they're going to apply it to 13, 14, 15, 16, 17, 18, because you lost. So, you know, and Harborside, we need Harborside. Harborside's powerful and important for us, and we need to rally behind them, but not on a bad tax code or on a tax position. It is discriminatory. It is problematic. It is bullshit, period, but it's the law. You need somebody that's going to file a return based on the law and give you the truth, because you chose to get into this industry. You chose, and when you choose to get into an industry, what if airline mechanics decided that they weren't going to follow FAA rules? When you get into the industry, you follow the rules of the industry. If you don't like the rules, you don't play in the industry.
I think that's very, very powerful statement, because people get in and they don't like the way it is, so they complain about it, as opposed to saying, hey, I want to play, but I got to play by the rules.
Yeah.
But,
and
you know,
you need to go to legislators, and you need to be educating, and you need to be talking to people, and you need to keep up on all those things. And you need to try to become part of that solution, because you've got the balls to be the trailblazer in the first place. Try to do it everywhere. Try to investigate and find the attorneys that are willing to do that, the tax team, the bookkeeper. If you can't do it, pay somebody enough to care about your books. Pay somebody enough to make sure that when you are not able to look at all those receipts, or you're bringing that information in, that person understands the tax position, especially if it's cannabis. And if it's not cannabis, if it's CBD, I think you have a bit of a pass. You know, I don't think you need to become a corporation right away simply because you're working with CBD. I have some basic dollar marks that I have people hit before I convert them to corporations, because you added admin in. So, you know, it's not the right answer. That's why it depends is always the answer. And in cannabis, more likely than not, you need to be a corporation, but it's the right flavor of corporation. And it's not just a C corporation all the time, because that's what attorneys will say. Because if you're misusing a C corporation, they're going to bust you back to a sole proprietor. You might as well try to see if you can fit into the paradigm of an S corporation. And if you can't do that yet, then maybe you need to be a partnership for 2 years or a year, and you need to see what the tax consequence of behaving badly is, because it will change your behavior. Human beings only change with pain, in my opinion. And so, you know, the first time I hand a $400,000 tax bill to some 28-year-old dude that runs a dispensary, the first question is, how do I not pay this again? I say, you spend money differently. I'll do anything. That's great. That means you'll learn. And then he does. And then he does. You know, that's the thing.
So much to, I wish we had more time, but let me get to 2 questions. Another from Taya. I'm manufacturing CBD products, getting raw materials and formulating into products that I sell. What multiples are you seeing for CBD manufacturers? And if I wanted to sell and exit in a couple of years, what target should I have now?
Multiples, I'm guessing the sales products? What is that? I'm not sure I understand the question.
Not sure.
I am seeing, hemp is being sold at $30 a pound in Oregon currently, or in this last market year. The price per of extract is between about $20 and maybe $26 additional cost to that original 30, but that's per gram. So there's some math to go from price per like pound to how much you're getting out of that, and then adding that multiplier. But, you know, I mean, the question is not what do your sales numbers necessarily be. That is part of a question, and it's a managerial accounting question that I do not do. I do tax. But what I am seeing is that people, for the most part, the extractor that I was working with last year that just sold for $11 million here, doing both cannabis and CBD extract. They're an extracting company and a farm and whatever. They, frankly, had $6 million on the gross profit, or on the gross line, you know, after 3 years. But they were bought for 11 million. But what they really sold, about $8 million of their sale was their customer list and their brand and their logo and their goodwill with vendors and their sales team willing to stay and the owners willing to stay on for 5 years in a W-2 capacity and not getting paid out all at one lump sum. They've got a long road to be able to get that money, and they have marks they have to hit, because this industry is very risky and no one's just going to swoop in and give you. I mean, if you are one of the few, I have had one client in my 9 years of doing this, who built a dispensary for $21,000 and was paid $350,000 for it and the license and the like. And it was in 2015, right as it transitioned over, and that guy's out of business. So, you know, I mean, I think you can't look at what the top line number is. It is an amalgam of who you've been. Do you have enough of the cult of personality to move this and made it distinctive from somebody else, from somebody else's business? And do you have the financials and the tax returns and the books and records to be able to back that up? Because when people buy it, you want it to be bought as a stock sale so that you get a different capital gain than maybe an asset sale. But you want to be able to say, hey, take the entire thing off my hands. And if it has a bunch of tax debt, it's never going to go. They're gonna nickel and dime you for the value of your assets and buy you for pennies on the dollar and throw you out. Unless you have a great logo or brand.
Next question. This comes from Aaron. What do you mean by spending money differently to avoid a future $400,000 tax bill? Can you expand on that, please?
Yes. So in the case of the dispensary that had, the first year I worked with them, had $400,000 worth of wages, salaries and wages. Single biggest expense, salaries and wages and payroll taxes. So there, when I investigated that, they had 9 managers. So in the next tax year, they had 1. They had 1 manager. And they had whittled it down and gone through the employees that were all just the friends of the owner and the hangers-on and the people that were getting paid but didn't show up to work and all that sort of stuff. And we were down to about $160,000 in true, honest to God, people who had worked to make the dispensary money by being bartenders and a manager. So that cash differential right there allowed them to get caught up on the sales tax that they had not been paying, and and get into good graces. And now they're being purchased by a group because they got their house in order. But their tax, the $400,000 of non-deductible payroll was an issue. They were spending $2,000 a month for some sort of advertising thing that didn't produce them even a client, even a person. They couldn't show a result of people getting into the dispensary because they were advertising for it. It was like a bonus reward bucks thing. Nobody used it. Nobody signed up for it. Nobody did anything with it. $2,000 a month. So there's $24,000. Please don't spend that like that. Please don't let all your managers go out and have all of your meetings at the coffee shop or the pizza place next door because the $13,000 of meals and entertainment is gone. Don't take everybody to the Cannabis or MJ Biz. Guess what? You don't need to do that. If you're going to go do those sorts of things, be targeted, be specific. Think to yourself, does this dollar I'm spending, here's my takeaway, does this dollar I'm spending relate directly to making inventory? Making, controlling, securing, producing, making inventory. Yes or no? Yes. Maybe spend $1. See if you can still get a deal, but maybe spend $1. Does this dollar relate to anything that's selling, general, or administrative? Yep. Do I really need to spend that $1? Am I going to get 3 times the return back on my top line for spending that $1? Because if you're not, you might as well just burned that $1 because you pay the $1 out and then you get taxed on it. Like you still have it in your pocket. That's what 280E does to you. 280E is designed to put you out of business by taxing you to death. It's designed to do that. There's no way to get around it. You have to control how you behave with money. You have to be super, super, super conservative with cash flow.
That was a very good answer. Thank you, Kate. Okay, last question today. Hemp banking. Still an issue.
Still an issue. Yeah, I mean, the banks in Oregon have somewhat gotten on deck with that. I think you are, we hope that the SAFE bill that's going through Congress, that act for banking is going to help. I think, unfortunately, that it's not until they strip everything related to recreational cannabis out of it because people are just so uninformed still about the peril of cannabis. It's such a political hot button. I would say keep trying. I would say keep banking. I would say, if you are a member, if you are a cannabis or if you are a hemp derived business, go join your local farmers union. Go become part of a group that's trying to advocate for where hemp gets produced, because oftentimes they have credit unions and maybe you can bank with them. I mean, you are doing something that they should be advocating for, because the farmers in California who are members of the farmers union should be really also saying, hey, we have these issues, even though we've decided to stray into this new emerging area of farming. So I would say continue, if you're dealing in cash, file 8,300 forms. Make sure that you are filing, if you're receiving more than $10,000 in cash for transactions, you need to file those forms. You can file them electronically. The penalty for not filing them is far outweighs the potential that somebody might call and say, are you a drug dealer? And they're like, no, I do hemp. And they go, oh, okay, thanks, bye. I mean, that's, to be able to play inside of that legal structure is really important. And that's not something your CPA will do for you. I don't file 8,300 forms unless
What's an 8,300 form?
An 8,300 form is the suspicious activity form for a cash transaction over $10,000. Well, it just gets the transaction form for being paid in cash, receiving more than $10,000 in cash for a payment for something. So, like, I had a group of farmers that were I was advising for another CPA, interestingly, and their first thing they said is, what do we do with the $79,000 that they gave us for our land lease in December? We want to put it in the bank. And I said, put it in the bank. And they said, well, what do we have to do to make sure that it's not some sort of, I said, you file an 8,300 form. You file a form that says, hey, I got $79,000 for leasing my land. They paid me in cash. Do I think, there's a little box that says, do you think this is a suspicious activity? And you just go, no. I got paid. And if somebody called you up and said, why'd you get $79,000? And farmers, much like real estate people, get these big chunks of money because they farm. It's this horrible slope, right? I got paid. I got my land lease. I got my land lease for when the crop harvested. There's often sharecropper agreements and stuff like that where people get paid these big chunks after the crop sells. So that's why a farmer's credit union or a farm union kind of banking situation might be far more likely to understand that you're going to get paid in these big chunks. And then as long as you're paying attention to, and they might be far more likely to allow you to bank because you're like, you're hemp, come on in. You're part of the union or whatever. So, I mean, I'm a member of the Northwest Farmers Union. I don't farm, I'm a CPA, but I mean, I met the CEO there, who was at the time this nice cattle rancher from Eastern Oregon, and he could talk more about hemp back in 2016 than anybody I had met. And it's because I've got 11 constituents that grow hemp. And he spent the time to learn. And he was at a hemp fest, talking the farmers union. He was very impressive. So I'm like, go outside of the normal scope and see what you can find. If you can find a banking relationship that's gonna be honest and respectful, it's coming. It might not be Wells Fargo or Chase, but there's a lot of alternatives to that. And I think those people are willing to do the work, especially if you bring in, here's the 2018 Farm Bill, it's legal. Here's where my state says it's okay. Here's where I have an ODA license, or I have the more you give them assurance to paper the file, the more likely they are to work.
Excellent. Wow. That is probably some of the best advice for women in this group, because I see that question constantly around hemp. So
banking is hard. And we just need to stay on Blumenauer and Merkley and somebody else, whoever, the Safe Banking Act, to try to get banking. I mean, if banking could come into this environment, believe me, it would make my life easier. But, if banking could come into this environment, we would have a lot more of a step towards the legitimacy to be able to say, we're not tax evading people. These people are banking and doing business just like everybody else. So.
Okay, Katie, we got to wrap it up. But before we go, I want to hear about your new project. You are moving into education.
I am.
You are going to be educating women in accounting who want to make the transition to cannabis. Tell us a little bit about this.
Moxy Accounting is launching in May, or Moxy Education is probably launching in May, continuing professional education for the CPAs in your life, for the enrolled agents in your life, for the tax preparer in your life. It is specifically designed to walk an accounting person through the nuance related to me having worked for 9 years in cannabis. It helps people, if you are still in the gray market and don't know how to deal with back taxes, it helps that person assess where you need to start and what you need to be able to do in order to be able to make that happen. It then, if you've started brand spanking new, it gives you some charts of accounts and abilities to be able to sort of look for the questions related to cannabis while that CPA gets up to speed with your industry. And really, it's me beating on the CPAs and the tax professionals in my world that are so conservative or so feel like they can't learn a new thing, that they feel like, I'd rather just throw this client out or get rid of this client than learn something with them. Tax needs really good professionals. We need people who have a lot of integrity to work in this industry, and I'm trying to be able to help that along by giving people the roadmaps for how to deal with the clients, how to manage the industry, what to understand about it from where it came from to where it may be going in your world, and what your board of accountancy or tax professionals would want so you can file a tax return that's not disingenuous or, at the worst, fraudulent. So that is the goal. Got to get more ladies in cannabis accountants down the road, because the revolution starts with tax, man. It starts with tax.
I love it. Thank you very much, Katie. And be sure to let us know when you release that. We'll share it in Women Entrepreneurs in Cannabis so that we can help get any accountants out there who are interested in learning about cannabis as an addition to their
Absolutely. I want this population on the forefront of that. We will change the world by our business practices. We absolutely will.
So I just want to end on one quick concept to explore. I have a client who's an attorney, and one of the things that he finds so exciting about this industry is the ability to argue new case law.
Mm-hmm.
Is that also the same from a CPA's perspective?
Most CPAs, I don't think, want to argue case law. I do. I want to set precedent. I want to be able to have a tax position that's clear enough that I can teach it to somebody else so you can become part of the solution with me. And if we have consistency in how we're looking at tax cases all over the different parts of the country and giving clients similar advice, we have the ability, when precedent gets won, or when we pick the right attorney to argue that precedent for us, or we pick the right CPA to argue that precedent for us, or we argue it, we have the ability to be able to, when we win, create a benefit for somebody that's in Missouri or New York or Iowa, because we did it in a similar, consistent, conservative way. It's the consistency that accountants like. And so lawyers are kind of looking to be the showboat in a lot of ways. They have a degree in argument. CPAs do not have degrees in arguments. They often want to be behind that business or behind the scenes. And so being able to entice those kinds of people who are risk adverse into a position that you could defend is gonna be good for the person that defends it, and is going to be good for the entire industry as a whole. So we got to win in court. We got to win in court. That cannabis has a legal problem. It needs a legal solution. So we have to beat them using their own legal tax laws. So we have to play the right game.
We need courageous women who are willing to come and do things that traditional CPAs are not willing to do, which is to argue the case law around taxes and
to research and to really understand it and be nuanced about it, so that you can, even if you to answer the first lady's question, like I got told that I could take this back to 2018. I don't know every answer. If your person has the case law, or you figure they have made some sort of connection that somehow connects the dots in a different way, I am happy to be wrong. I want that dialogue to be available to me, because we do not know everything. We have to dialogue and bring those new pieces of information. Because if somebody in the Colorado tax court won a case, I wouldn't know. It's not federal. So it doesn't relate to the whole of the state, but maybe it is in Colorado something different, or Montana, or what have you. And so what we need is that group of accounting professionals that are willing not to say you're wrong or you don't know what you're doing, but hey, this is my understanding and it's different. Because I would love to paper my file with something that gives me the ability to move off of that, because that's my job, is to help people do that. But if it's just to walk into court and have the judge say, what evidence do you base this position on? That's the question you're answering. You're going to have to answer when you file a tax return. Ma'am, what's the evidence that you have to be able to take this tax position? And if you don't have evidence, written, hard evidence, not Google, evidence, you're going to lose.
Yep.
Why take the tax position in the first place?
Yep. Wow. Well, thank you so much for all of your wisdom and insight today, Katie. It is so timely as we move into the new tax season.
I am so looking forward to getting out and educating after tax season. I am underwater with taxes right now, so yes.
Well, come back when you launch and let us know, because I'd love to have more of a conversation with you around the opportunity that we have by bringing more women professionals into this space and encouraging them to take up this fight.
Absolutely. Yep.
All right, ladies, thank you so much for joining us today. We are going on hiatus for a few weeks while we prepare for our big launch at the end of the month. For more information on that. I hope you ladies have a wonderful week. We'll see you in Women Entrepreneurs in Cannabis. Until next time, good luck. Talk to you soon. Bye-bye.